This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. And welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz, and today's July 9th, 2020, show number 72. Well, Nick, looking at things, initial weekly claims continue to decline, kind of like the COVID deaths, slowly at first and then rapidly. So, yeah, the continuing claims are the key.
Yeah, we're starting to see those claim numbers go down. Again, there's still over 1 million, so we have to be aware of that. But it's definitely getting better. It's going to take a little bit more time. It'll slowly improve. Again, you have big companies still, falling off the cliff here, and that causes a lot of layoffs. But again, it's slowly, as the economy opens up, it'll get a little bit better. Again, we just don't need a shutdown. If you get a shutdown, then you got, some real big problems. But right now, claim numbers improving. Weekly continuous claims also improved. And, we're seeing the revisions even a little bit better there as well.
Yeah, the continuing claims are the key. Some people seem to think there's about 10 million more continuous claims than what the numbers are reflecting. I'm not sure if that's true or not, but...
Yeah, I wouldn't know if that's true or not. In fact, all of these reports are somewhat suspect, so you never can make heads or tails out of it. That's why I always tell everybody, really just watch the market's reaction. That'll tell you everything you need to know, and the chart pattern is really what's going to lead you. But it is encouraging to see, people going back to work and getting back on their feet again.
Yeah, for sure. And supposedly 21 states have either paused or re-implemented shutdowns, lockdowns, whatever, or somewhere in between. But as the summer drags on, it's going to be harder for them to justify this and maintain it.
I don't see how they're really going to do it, but it's happening. California in particular, which is a very, very big state. I know they have lots of stay-home orders now going on. So we'll see where it goes. Again, at this stage of the game, I think people are done with it. So we'll see how it all plays out, and we'll take it one day at a time.
Yeah, exactly. I mean, the deaths have spiked a little bit the past couple of days, but that's not unusual. It's a sawtooth chart if you were charting it. So they've gone a little bit over the 7-day moving average, but now they're coming back down in all likelihood. And who the heck knows what the real death numbers are anyway. So when we're looking at the coming week, it's going to be another options expiration week.
Yeah, and that's something I wanted to bring up today. Today's Thursday, and what I've noticed over probably the last year, even year and a half or 2 years, probably the Thursday before options X, you start to see a lot of game playing taking place. And during options expiration, I always tell traders, stocks that are beaten up, you watch them. If they're down enough, they're going to get bids. And stocks that are in the stratosphere, if they're up enough, they're going to see sell side action. And if you take a look right now, we have a very, very low put call ratio, something I've been telling my members, saying, hey, the markets are, going up, but we have a low put call ratio. We had an up Monday. A lot of times we'll get a lot of backing and filling in the market throughout the rest of the week. But next week we go into that pivotal options expiration. So it'll be next Friday on the 17th of July. The July expiration will expire, and the whole week through you'll get a lot of game playing, but it usually starts around today. So again, stocks that are beaten up, those are the stocks that if you find some real good levels, they're really likely candidates to get a bounce. Stocks that are up into the stratosphere like the Apples, the Amazons, those stocks next week are vulnerable for pullbacks.
All right, interesting. So we won't be surprised if we see Apple take a hit because they just upped it and they're calling some of the analysts for $400 a share for Apple.
Yeah, and I'm not saying the trend isn't up, but I'm just saying once they bait everybody in to buy some call options there on that news item, they'll flip the switch and they'll take it down, and they'll come up with some excuse next week for the stock to sell off.
Interesting. So really you kind of have to be very careful when you're buying this week.
This week and next week are very, very critical weeks because you get all of this game playing, and it goes on every single month. Just think about it. It's not hard for these institutions to have computer systems that simply calculate where the small retail options trader is placing his bets. They do it all the time. I could do it with my naked eye if I wanted to. I just got to sit there and look at one particular stock. But these guys got computer systems that do it for them, and they calculate all these stocks, and they know where the imbalances are. And then they're going to move the stock to a certain strike price by the end of next week that really takes out most of the retail options traders. So, again, this game has been going on for a long, long time. It will for the end of time, from what I believe. And, again, just be aware of it. You'll see it. You see it every month.
So that's why you need to leave time when you're buying options.
That's why I always tell everybody, give yourself 2-3 months minimum when you buy an option, because you don't want to get caught up in the near-term expiration whipsaw, which takes place each and every month.
Yeah, and of course the object of the game for the big institutions is make those options expire worthless.
Yeah, all they need to do is figure out where everybody has placed their bet, which it's very easy to do in the options market because you can see everybody's sale come across, small sales versus large sales. So you know who the institution is, you know who the retail trader is. They add up those numbers and they have they can create a perfect strike price for where they need to pin the tail on the donkey.
Yeah, so that's how you avoid getting squeezed out.
That's exactly right.
Yeah, so when we first started talking, gold and silver were higher. Now they've been knocked down. Gold's down a little bit. Silver is just marginally up by a penny.
Yeah, so, if you look at gold futures today, they're now down $7. But, I mean, the run that they've had has just been absolutely incredible. And if you take a look at, say, silver today, just using the SLV, that's basically flat today. And silver is actually still hanging in there pretty well. But, again, precious metals have been very, very strong. What I'm going to be doing now is just watching the pattern to see if the leadership changes where silver starts to catch a little bit more momentum, because gold is very, very pricey up here at this stage of the game. So I'll be eyeing silver more closer going forward now.
So you're going to watch silver to see if it is taking the leadership, which would mean we'd start to see a compression in the gold to silver ratio.
Yeah, and right now, you got to think about it. Spot silver, as we speak, is trading, or I should not say spot, but silver futures trading around 19 and a quarter. Gold futures are trading, basically at 1,800, a little over 1,800. So, I mean, silver, if it starts to play any kind of catch up, I mean, that's going to be the place to be.
Yeah, interesting. And once it takes off, we know what its peak was in the past, 49.50. I guess that was back in 1980, and it could very easily hit that and surpass it.
Yeah, well, people also forget silver got to almost $50 in 2011 as well. So, again, when you start to get that commodity starting to squeeze up, and it has industrial use as well, I mean, it really can be the big runner going forward. It's like the Wizard of Oz, follow the yellow brick road, but it was in the book, it was the silver slippers that did the trick. Yeah,
the silver slippers. We all know about the Wizard of Oz, and maybe we're going to see a replay of it. All right, I think we'll end it for today, Nick, and see what tomorrow will bring. And remember, be it ever so humble, there's no place like home, right, as Dorothy said. And, hey, take a look at Nick's site, inthemoneystocks.com, trading record, all good info is there for you. Twitter feeds at ITMS, at Nick Santiago 01, and at Kerry Lutz. Questions, comments, where do you think the market's heading? How do you make money in a market like this that, as Nick has said, the easy money has been made? Just email us, kl@kerrylutz.com, kl@kerrylutz.com. Nick, we'll talk to you tomorrow.
Sounds good, Kerry.
This concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. For more information, go to inthemoneystocks.com and see Nick's full trading record, or check out the Twitter feeds at ITMS and at NickSantiago01.